Hey traders, welcome back. I wanted to share a couple of our setups that we're using on our 0DTEs right now. Some that are working better than others, and probably more important than anything, get some of your comments on what you're using right now for your 0DTE setups. I think it's an interesting market right now, and certain setups definitely, I believe, have different advantages over another. So I wanted to get into that and just share that with you. I saw this phrase over the weekend from obviously the amazing Charlie Munger that's passed away now, but what a great investor he was. Really the juggernaut behind Berkshire Hathaway, and even Warren Buffett has admitted that he was really the brains behind the operation. But I love this quote. He says, the best thing a human being can do is help another human being know more. So obviously, I think one of the benefits that we have with trading rooms, if you're, no matter what trading room you're in, is that ability to be able to share ideas amongst other like-minded traders. So with that thought in mind, I wanted to share with you what we're working on with our 0DTEs. And again, get your feedback on what's working for you. What are the best setups for you right now with 0DTEs? So these are some of the common approaches that we see out there. They're the common approaches that we use in our live trading room on a consistent basis. And they are just simply going long options, buying calls, buying puts, using butterflies to initiate a trade. Credit spreads, of course, are a big one, and it does seem like credit spreads always lead into a full iron condor, and talk about that in just a second. Event contracts, we've had a lot of success with those. And then I want to share a couple of ideas with you that we've been using lately that I think give a pretty darn favorable risk-reward ratio in terms of managing that risk side of the equation. And that is starting with a 1DTE debit trade to sort of facilitate the anchor or entry point for the next day for your 0DTE trading, and then using an iron butterfly, a long iron butterfly, and then if necessitated, adding a credit iron condor overlay on top of that. So let's get into it and talk about it. Now, just one thing again, I always like to stress is that there is no panacea, there's no silver bullet, there is no one singular trade out there that is better than everything else all the time. Every trade setup serves a unique purpose. They do different things in different ways. So it's important. I know a lot of times people will say, oh, this setup, this strategy, that's my favorite, or this one I absolutely hate. And that's not really fair to that particular strategy or setup, because they all have a purpose and they will all work in the right scenario. So again, this is not necessarily a training video to go into each one of these, more just to talk about what we're doing and what we find is working, and give you a couple of aspects of why we like what we like. I guess that's the easiest way to look at it. So a couple of the common approaches, obviously, number one is just simply long options. And I think it was Albert Einstein that said that human nature is such that we tend to overcomplicate things of great import. And trading and our money, of course, is of great import to us. And we can tend to overcomplicate trading, and sometimes we build trades with 27 legs in them, and it just it's hedged in 9 different directions, and it is easy to get overcomplicated with our trading. And so I do like the simplicity of just simply trading long options. You think something's going up, you buy a call. You think something's going down, you buy a put. Now, there's obviously a bit more nuance to that in terms of how you would place that 0DTE order, what you're placing it on. But I will say that we have had tremendous success with this approach. Now, we call it scalping. We do it in our scalping room, and we use the QQQ options. And again, we use money order flow indicators to give us an idea of whether there's more buying than selling or more selling than buying. But it can be a really simple, straightforward, effective way to trade 0DTE, and it has the potential for really good risk management. And so I will just tell you very quickly, our goal with this approach of just simply buying long calls, buying long puts on a 0DTE basis, we designate Tuesdays and Thursdays in our live trading room to do that. We can do it all day long, but the average is that we're probably done in the first 2 hours of the day. That's when the most price action happens. And we've allocated about $5,000 of capital. I'm trading 17 0DTE QQQ contracts. And so sometimes that's as little as $3,200. Sometimes it's as much as $5,600 in capital that it takes to trade those 17 contracts. But so we ballpark it at about $5,000 of capital that we use. And we have a goal of making $50,000 a year, trading twice a week, about 4 hours in that week, with this particular strategy using long options. And we are right now on pace for a little bit over $57,000 on a year in, year out run basis, on an annualized basis. So we're right on track with where we want to be with this. And of course, you have drawdowns throughout the day, all day long, really, as you trade this strategy. But we try to keep our losses to about 20 to 30 cents per contract, and our wins to about 30 cents per contract. And our average win rate is close to 72%. So you can see that that kind of works out for us on a fairly consistent basis. So you don't have to get overcomplicated with 0DTEs. You can, if you have the time to sit in front of your screen, long options can be a good way to approach that. And if you want to check out what we're doing with regards to that aspect, you can go to tryscalpingnow.com and join us every Tuesday and Thursday for that. The other setup is a butterfly, and I'm seeing more, and well, obviously there's a ton of popularity with 0DTE trading right now. A lot of trading rooms popping up that are solely focused on 0DTs. I think that that is a mistake. I don't think that there's any one strategy that you should ever devote yourself to. I think it's important to have a very diversified model portfolio. But there's a lot of good reasons why you're seeing a lot of these trading rooms pop up that are focused on butterflies. And I want to just show you one real quickly here. Let's just take a look at one. So this would be an example right here. This is I'm filming this on March 18th, Monday, March 18th, and this is a Monday, March 18th trade. So it's a 0DTE trade, and it's a butterfly setup. And there's some interesting aspects to it. I think one of the primary reasons why you see a lot of trading rooms using butterflies is because there is a fairly favorable risk-reward ratio, and that comes with a atrocious, just horrible probability of success, but that's okay because the risk-reward ratio is so favorable. And you can see a couple things here in this just particular setup here today. This would be placing a butterfly up above where the current price is. You can see the price is down right here, and it's assuming that we would be moving into that butterfly. And again, the metrics are sort of compelling in a lot of ways. You can see that I'm putting up about $114 of buying power. You add in your commissions, and I'm risking maybe $130, $140 there. You can see that total risk of about $140 there to the downside. But if we were to land inside of this butterfly, anywhere in here, you can see obviously if you pinned it right at the top of the profit tent, you can make almost $800 back. So you're risking $140 to make $800. Now, that's probably a very low probability of success, but there's a decent chance that you could land anywhere in here and maybe double your money. Go from putting $140 in here to making $300, $350 back. And so this is a very favorable risk-reward trade, and you can see here in the orange line that we don't actually have to get all the way into the tent, and the prices are bouncing around here, so that's going to move around. But you can see the trajectory of it, that we actually don't need to get this all the way into the tent to make a profit. The problem with butterflies, and here's our biggest issue with them, is that they have very low probabilities of success. This one is actually incredibly high at 22%. A lot of butterflies that you'll build will have a 15% probability of success. And so one of the things, and this is where I'm going to get to some of our favorite trade setups right now, one of our goals is to make at least $1,000 a day trading our 0 DTEs. Now that's the cash component, right? One of the things that you will hear over and over again of any trading room that trades butterflies, they don't really talk about dollar profits. They talk about percentage profits. They say, yeah, you got 140 bucks tied up in this, and you could make almost $800 back. And they talk about 10 timesing your money, and you can 10 times your money. You can get 1,000% returns in a butterfly. But the problem with them is these low probabilities. I don't know anybody that really ever puts a substantive amount into a butterfly because it just doesn't make sense. Would you put $5,000 at risk in a trade that only has a 15 to 20% chance of working? Probably not. Now, I feel like I love butterflies. I love the risk-reward ratio of these, and I think the way that we trade butterflies probably makes the most sense. And that is that we never ever put any of our own personal principal into these trades. We trade some of these other 0 DTE setup strategies that I'm talking about here today. And then if we can, garner $1,000 profit on those, we'll go ahead and take $150 to $250 of that profit and put it into a butterfly. And if it hits, you can double, triple, quadruple that money, and that's great, and it makes it for a really strong day. But if it doesn't hit and it goes completely to zero, all you've done is just reduce slightly your overall profit on the day. So our sort of claim to fame with butterflies is we've never lost a single penny of our own principal in butterflies because we never put any in. The only thing we would ever put into a low probability of success trade like this would be profits from our other setups. And I think that's a good middle of the road ground. So butterflies can be a great way to trade 0 DTs if, in my opinion, you're combining it with another higher probability setup that can give you some cash to throw at that, so that if 8 out of 10 of them don't work, you don't care. You're okay with that. The other setups that we see a lot that we use in usually one way, shape, or form on almost a daily basis with our 0 DTs are credit spreads. And you'll find that credit spreads for most traders always lead to an iron condor. So why is that? Well, let's take a look. Again, if we're looking at the S&P, one of the things that we like to do, whatever is in motion tends to stay in motion. The trend is your friend. Momentum trading, what's going up continues to usually go up. What's going down continues to usually go down until, of course, any of that changes. But momentum trading is a way to get an edge or try to have an advantage. And so we try to trade from what we call the strong side on a trade. And if we were saying, right now, obviously the futures, I'm looking at the futures, they're up 41 points. And so we say, okay, well, we think that the market is going to go up here and we're going to sell a credit spread. Well, that can give us a nice probability of success. It would look something like this. And, that's a 91% probability of success right now. So incredibly high probability of success. But of course, the challenge with a credit spread, you can see that here I'm putting up about $1,400 and I'm bringing in about $60 in income. So it's not a horrible ROI on the trade for a 91% probability of success trade. It's not horrible. But the problem here is that I've got $1,400 into the trade. And if the trade doesn't work, I'm basically going to lose pretty much all of that. You can see down here, it's going to be a very, very poor risk-reward ratio on a credit spread. Now, it sort of gets exacerbated with a lot of traders as well because they will say, well, geez, an iron condor trading both sides of this trade doesn't require any more buying power. And I could, really juice that $60 potential income up by selling a corresponding call spread against this and turn this trade into a iron condor. And of course, that really juices my return potential. That credit goes against the amount of money that I have to put up. So now I'm only putting up about $1,000, and the profit is a whole lot higher, as you can see. But the challenge again with that is that you'll see that it actually lowers your probability of success, because now you have risk on both sides of the trade. So it can be a little bit of a challenge here. These are high probability trades, credit spreads, iron condors, they're high probability trades. But if you have one that goes against you, you can lose a whole lot more than you could potentially gain. The risk reward ratio on them is not very favorable. And so one of the ways that we combat that is that we scale slowly into our trades. I generally set aside $10,000 a day to trade the SPX 0DTE setups that we put in place. And if we're using this approach, I'll start with one contract, 10-point wide spread. So I'm starting with $1,000. And then if the trade works, we leave it alone and we enjoy the profit. If it doesn't work, we have that dry powder to be able to scale in. So that's all well and good, but the challenge is when the trade works. When the trade works, I've got $1,000 in that trade, and in this case, making about $60 of potential return. And that's a tough way to go in terms of trying to set a goal of making $1,000 a day. So with credit spreads, sometimes we become a victim of our own success. We start off very small with tiny amounts of buying power in those so that we can scale and alter it and fix it and defend it if we need to as the day goes by. But if we don't need to defend it, we ended up making, $60 on the day, which is a far cry from our $1,000 goal. And of course, that's because we are worried about IV expansion. We're worried about volatility. The biggest thing that messes with a credit spread or a credit iron condor is big, massive movements. You don't want IV to increase. You don't want movement to expand. You want things to stay consolidated and contracted. And so one of the things that we've been doing lately, where we can actually take that fear, that worry that we have in terms of, oh my gosh, what if the trade moves against us too much? And we're turning that to our advantage and using the potential for IV expansion as something that can actually benefit us financially. Now, there's a couple of ways that we've been doing that lately, and one of them is event contracts. And I won't go into a great deal here on event contracts. I've done a couple of videos on those. We have had some tremendous success with those lately, and we're still figuring out sort of the best, most efficient way to trade these, because they are fairly new on the market, but boy, they've been good for us. And they do give you the potential as a trader, if you can set them up correctly, they do give you edge in your trading. And so if you want to check those out, again, I would encourage you to go look at them. You can go to tradingbinaryideas.com. You can sign up to trade those for free. I think you can start with maybe $50 if you want to. So it's an easy, simple way to explore different ways to trade 0DTEs. But the other couple that I wanted to share with you today, first of all, is this one right here, a 1DTE debit starting point. And these are very, very interesting approaches. So you can see that we've got one on here. This is one that we established on the NDX on Friday. So Friday before the close, we put this trade on as a 1 day to expiration trade. So now today, Monday, it is a 0DTE, and it's a debit call spread. Now, we just simply trade whatever the momentum in the market is at the time based on our technical indicators. So even though Friday we sold off a little bit, the overall general bias that we have is bullish. So we put on a bullish credit spread, a debit spread, sorry, put on a bullish debit spread here. We bought a call and then we sold a call. And this is what that risk graph looks like. Now, as I'm sitting here this morning filming this, the NASDAQ futures are up 216 points. So this looks like this should be fairly profitable on its own. But One of the things obviously that we know is that we put this on a day before we trade that 0 DTE setup. We know that that next day, the 0 DTE day, the market's going to do one of three things. It's going to go up, it's going to stay the same, or it's going to go down. So in this case, we put about, you can see we put about $500 into this trade, and it has about $450 or so of potential profit in it. That's a little bit worse risk reward ratio than we generally like. We usually like to keep it at least 1.5 to 1. So if I put up $500, you know, I'd like to see maybe $750 of profit potential here. But this is still decent. And so, you know, right now, again, with futures up at where they're at, we're looking at open up a couple hundred points above this. We'd be up in here somewhere. And so for a lot of our traders today in our 0 DTE room, if they could make $400 on this trade, that would be sufficient. It's a pretty good risk-reward ratio. It's a better risk-reward ratio than a credit trade. That would be sufficient for them if the market went up. For a lot of our other traders, though, they're going to add to that. And this is what I would do as well. I would probably come in and add something down here. And again, I'm just grabbing some random strikes and some random prices. But you can see that if I just added a small portion to that, it does a couple of things. Number one, it opens up a profit window to me to the downside. So it gives me a little bit higher probability of success in the trade. Of course, it also brings in a lot more credit as well. And now you can see that $1,000. So we're looking to get $1,000 out of our trades. This is a more efficient way to do that, because if that does hit there, you get your $1,000. And I've got roughly about $5,000 in this trade versus the $10,000 or $11,000 that I would normally have in a 0 DTE where I'm using credit spreads to try to get my $1,000 profit. So it's a little bit more efficient from that standpoint. Now, let's say that it was the opposite effect, and that instead of going up today and going into the profit zone here, we were going to go down today. Well, if the price action was to go down, we would sell the call side of that, and then you would see just obviously a little bit more interesting setup here in that it gives us a little bit of a protective layer or a kicker. We call it a kicker up here, insurance kicker on this upside, that if the market were to retrace from that downward movement and head back up again, we've got a little bit of a protective area up in here that, you know, normally if it got this close, we want to be doing something with that trade. But in this case, we're a little bit more comfortable letting it sit in there. And of course, it would be a home run if it landed in there. But even if it landed down in here, we'd still get our $1,000 profit on the day. And again, you're putting up very little buying power to do this trade. And it's a just more efficient way to do that setup there. So this has been a very successful trading setup for us. We'll probably initiate another one of these today with a 1 DTE initial setup for tomorrow, and we'll use that as our foundation for tomorrow's starting point on our 0 DTE. The other setup, though, that I wanted to show you is one of my favorites, and we had really good success with this on Friday last week, and that is starting off with an iron butterfly that's a long iron butterfly, so it's a debit trade. And then if you see as the day starts to progress, we get a couple hours into the day, and you see that that iron butterfly is not working, we would overlay that with a short iron condor. Now, let me just show you what that looks like. That's the trade setup right there, and that's what it looks like. This is, in fact, the actual trade that we did put on Friday. And the thing that's great about this trade, you can see that we try to center it right around where the market is at that particular point in the day when we enter the trade. And the idea here is that if the market consolidates and stays in the same place, we'll get an okay rate of return. Not an amazing rate of return, but an okay rate of return. And then as the market moves against us, if the market starts to gain volatility, if IV starts to expand, if we start to get big movements and the market pushes down or the market pushes up, then we actually have the potential to benefit from an activity that normally would hurt us in a credit spread. And that's exactly what happened on Friday. In fact, we actually dipped down below this profit line here for just a bit on Friday. But one of the other things that you'll notice here with this setup versus, say, an iron condor is that this P&L line is a lot more slanted versus an iron condor. It's pretty much straight up and down. It's a cliff. You go from profits to like max loss just straight off the bat. And so even though we were down in here, the risk was very, very minimal on that trade. And we still felt comfortable holding it because, again, we were so close to this profit window. It did end up working back its way up here. And we ended up booking a really nice profit on this trade. This is one of my favorite setups. It's one of your best, I think, bang for your buck setups. And it, again, starts right in here with this iron butterfly that we would place. You can see those are the long legs. Here's the short legs out here. And then if that particular trade itself doesn't work, we add the iron condor overlay. And we almost likely be working one of those today as well in our live trading room. So I love these setups right here. I love the idea of the 1 DTE debit starting point, and then the iron butterfly, and then if it's necessitated, adding a credit iron condor overlay on top of it, because they take advantage of what most people hate with 0 DTEs, and that is some huge unexpected move. And in these particular setups, you can actually benefit from those unexpected moves. So I really like those. I like this setup. Again, it was a pretty big hit in the trading room on Friday when we put that on, and it resulted in a really nice success for us, which with a credit spread, we probably would have been in a loss position. So anyway, just wanted to share all that with you guys. Hope you guys are having success with your 0 DTs. I'd love to hear your comments on what setup you find to be the most exciting for you right now. One thing I will say, if you want to follow our plan and trade with us in a live setting, give you a absolute 100% satisfaction guarantee. If you follow our plan, if you go through our training, if you do your one-on-one Zoom setup with me and do your daily check-ins, and at the end of your first month, you don't feel like it's the most highly valued trading room that you can be a part of, I will give you 200% back on your first month subscriptions, no questions asked. So it's a pretty easy way to see what we're doing and how we're doing it. If you want to check it out, you can try it for free. You can go to try0dteforfree.com. You get a free week's access to that. You'll have the opportunity to spend about a half hour to 40 minutes with me on a Zoom, making sure you're all lined out on how we trade these setups. I'll answer any questions for you. So if you want to get a hold of me, you can at scottstewartcontacts.com. Always love to hear from you guys. And as always, appreciate you guys. Appreciate the trading community that we are a part of here. You guys are awesome. Hope you all have a good trading week. It's FOMC week this week, so Wednesday is always an exciting day for us. Hope you guys have a good trading week. And again, if you want to come trade with us, we'd love to see you. You can go to try0dtforfree.com. Take care, guys. Have a good trading week.